Hello everyone. In this session, I'm going to talk about Bitcoin, the economics of it, the technology behind it, and the governance aspects relating to this. This is an article which is specified as a reading for uh, FRM Part 2 as a part of the current issues for the 2017 curriculum. So you may read through the article as specified by Garth, and I'm just pulling out a quick summary of that particular article based on the aim statement that has been provided. So this particular topic, Bitcoin, actually it's a online communication protocol as well as a currency in itself, which facilitates the use of virtual currency. It's not one single currency, it's a virtual currency, but that virtual currency can very well be used for various electronic payments. So we would like to read through this article and try to see how Bitcoin has really facilitated this virtual currency scenario, how we can do electronic payments using Bitcoin, but at the same time, what are the various risks that are involved in the usage of Bitcoin. So, as a broad agenda here, which is based on the aim statements, is to give you an understanding of what are the various incentives to use virtual currency. What do we mean by virtual currency, first of all? And why do we need to use virtual currency? Bitcoin per se, what are the features of that Bitcoin? Along with that, what are the various limitations and concerns associated with the usage of Bitcoin? And talking specifically of the specific risks that are associated with Bitcoin and the common usages of Bitcoin, both for good as well as for bad, and what is the main reason to identify the ways in which the usage of Bitcoin can very well be regulated, and similarly for that matter all other virtual currencies that are coming up as well. So when we talk about using virtual currency, some of the advantages are we can very well disrupt the existing payment system, the cash based payments. So the existing payment systems can very well be disrupted, and in a way the existing overall monetary system, the way we look at it, can quite drastically change. And from an advantage perspective, it can give good amount of insights regarding the market design, even the behaviors of the various buyers and sellers, because we are using the virtual currency for transactions. So the behavior of who are the typical buyers of virtual currency, who are the typical sellers who are accepting virtual currency, we get into a various insights regarding the behaviors of the buyers and sellers. First of all, this is more of a peer-to-peer exchange. So there is no clearing house, there is no exchange that is typically facilitating the buying and the selling process. So the bitcoins are purely a peer-to-peer kind of an exchange. So that is facilitated through virtual currency. The speed at which a transaction can be executed, it uses technology to the core. The efficiency in which the payments can be made is much more sophisticated. And probably all the transactions, I need not restrict myself to the local currency or domestic currency. Even the payments can be done cross borders quite comfortably. And the major part of it is completely decentralized. So no one country is controlling this particular currency, right? So keeping track of the transactions is completely decentralized because there is no central agency which is monitoring all the process. So it is producing a currency which is independent of any central authority. It's not the central bank of a particular country that is designing this currency. It is purely designed based on mathematical algorithms. So it can be transferred electronically. There could be an instant transfer and the transaction fees is almost negligible. So using virtual currency could really facilitate the quick, efficient ways of making and receiving payments. So which means in the next generation we can see too much of usage of virtual currency in the day-to-day transactions. Now coming to Bitcoin, it's a form of digital currency and it can be held electronically. So there is no physical form of holding this currency. And it can be used for online purchases. Normally, any currency in the world is based on gold or silver or something, right? The amount of gold reserves that a country carries, corresponding to that, the printing of the currency can happen. But here, it's not based on gold, this Bitcoin, or even silver, but it's purely based on mathematics. So, around the world, people are using various software programs which have a mathematical formula, and that mathematical formula is generating the various Bitcoin. And this mathematical formula is not again a proprietary one, it's freely available kind of a formula, so anyone can check that particular formula and based on that they can instantly generate the Bitcoins accordingly. Now coming to the negative side, even lacking a central authority looks like a negative also, right? If I want to distribute a coin or to track who is holding how many Bitcoins, it's not possible because there is no one single central authority which is controlling the issue process. So every machine that is mining the Bitcoin, which is comfortable in terms of mining the Bitcoins and processing the transactions, will be a part of the network. So there is no one single central authority who is monitoring the whole process. And all these machines, they work together. So it's purely algorithm based, mathematical driven kind of a virtual currency. Now, because of this, there are so many limitations and concerns that might crop up. The process of issuing the currency, no one is issuing the currency. Verification of the transactions, who has done what kind of transactions, who is right now holding what amount of currency. It is more and more difficult compared to the regular traditional bookkeeping mechanisms. So there should be some kind of further thought process that need to be given in terms of how Bitcoins can be used more and more effectively. Now, instead of getting used for regular electronic transactions, nowadays we are finding these being used very heavily for money laundering purposes across the borders. A lot of terrorist financing is happening because of this Bitcoin and even tax evasion. So probably you see that the Bitcoins are used more or less for all the wrong reasons, right? For money laundering across the borders, evading of the taxes, financing the terrorists, and even the fraud. So all these things are coming out to be the major usages of Bitcoin. So the major thing, if I talk about virtual currencies, they are very, very difficult to regulate. One, because they are cross-border, anyone can create them. And responsibilities, they are cutting across the different agencies, not just at the national level. Anyone can have the responsibility of producing the same across the world. So the regulations of this currency becomes very, very difficult compared to regulating normal currencies like dollars or rupees, which are being issued by corresponding central banks. So another drawback, if you see, users can really hold multiple Bitcoin addresses. right? Because it's purely based on the machines and the address of the machine. So they are not linked to names. So who is holding what is simply not known. And personal identification information is also not available, which means everything is virtual, and there is a high possibility that this is being used for all kinds of wrong reason rather than as a currency which can be used for electronic buying and selling processes. The intention of introduction might have been good, but the most of the time the way that it has been used is for wrong reasons. Now, if I look at specifically different kinds of risks that are associated with Bitcoin. Now, I need to see Bitcoin is just like there are two aspects of Bitcoin. One, it itself is a kind of a virtual currency, which is like a store of value, just like your dollars and rupees, etc. So, on one side, I could look at Bitcoin as a store of value, and at the same time, it's a kind of a technology which is enabling the online buying and selling process. So the kind of risks that are associated with it are majorly different from the risks that are associated with the traditional currency. First way, if I look at market risk, the exchange rate between Bitcoin and other currencies. Because of it, the Bitcoin values can go down. The currency, the electronic currency value can go down. So we are talking about an exchange rate between a Bitcoin and other currencies. It's a major source of concern. One, for the users considering the Bitcoin for transactions, because the value of the Bitcoins might go down quite drastically because of the exchange rate fluctuation. So those who are using Bitcoin for transactions also will get affected. Those who are using Bitcoin for as a store of value also is getting affected. So you can visualize Bitcoin as something holding some amount of gold. That's it. Right? That's also a kind of a currency. Now you could see if I want to use that for transaction purpose, that is also difficult if the exchange rates are very volatile between the Bitcoin and the various currencies. So that is the kind of a market risk that is coming up. Then we have a shallow market problem. So the trading volumes of Bitcoin even till date are very lower. So the weekly volumes are much lower. So if I really want to exchange a big number of Bitcoins, it becomes very problem for me. So that is what we are calling as a shallow market problem. So I want to trade a large amount of Bitcoin. I cannot do so immediately without compromising on the price. So basically it's a huge liquidity related issue currently with the usage of Bitcoin, especially if I want to trade in large amounts of that Bitcoin. Then there is a possibility of the counterparty risk. One, we have seen that the ecosystem of the Bitcoin is centralized. The various exchanges, they are acting as a de facto banks with respect to the issuance. So when the users are converting their own current currency to the Bitcoin, the exchanges are acting as the de facto banks. But that's it. That particular Bitcoins are typically left in the exchange itself. So now that particular exchange can very well default on the payments at a later point. Because one, they have converted their currency to Bitcoin. Now when they want to convert their Bitcoins back to their currency, that is where they will have a problem because the exchanges may very well default on the process. So the high volume exchanges, so wherever the exchange, wherever the conversions are happening on a higher and higher volume, they are closing out because of security breaches. They are not able to even reimburse the customers. So that is where a bigger loss is coming into picture. And the operators of low volume exchanges, they are directly absconding without any kind of explanation. So which is again a very big threat with respect to counterparty risk. Even the transaction risk is very high because it's very irreversible of any kind of Bitcoin payment that I have made, if I want to reverse the payment, it's a kind of a big difficulty. So if Bitcoins are sent purely due to error or fraud, so there is no built-in mechanism to undo the error. If I really want a payment system to be really strong, I should be able to undo the process whenever something has gone wrong. So consumers obviously will favor a payment system that allows the reversal any mistake being done. Unless again manually we intervene into the system and make the necessary correction, it's not happening. It's not the correction does not happen in a smooth manner. The other drawback from the transactions perspective is the clearance relating to the Bitcoin transactions. So they have to be added to the authoritative blockchain. Only then the transactions are getting cleared. Until that time, the Bitcoin transactions do not get clear. And there is always a possibility. So because there is a kind of a blockchain kind of a process, there is a kind of time delay before the whole block gets clear. Now, people who are using this technology and the currency for illegal purposes, they could double spend the Bitcoin because they will get cleared only when after a particular time delay. So they place very fast transactions. Whatever X number of Bitcoins they have, they do the transactions for 2X with rapid transactions before the blockchain is simply updated. That also could be a very risky way of doing things, and that could have a very big impact on the transactions. So even these aspects need to be looked at while bringing in some kind of regulations, especially if these kind of virtual currencies should really start ruling the whole process. Then apart from that, there are wide varieties of operational risk. We know operational risk is majorly due to the people, the systems, these kind of things typically failing. And you could see there is scope for n number of activities under this belt which can cause operations risk. So any action that is undermining the technical infrastructure of Bitcoin, the technology relating to the Bitcoin comes under the operation risk. All kinds of sources where the security can very well be breached is also coming into the operational risk. So there are various kinds of vulnerabilities that I can expect with the usage of Bitcoin. All kinds of operating errors are possible. The security breaches are very much possible. All kinds of malware that drives in search of the credentials of the wallets also are major sources of operation risk. Even protocol design, there could be a kind of operational risk. The breakthroughs in cryptanalysis is also another major risk coming up from the operational perspective. Denial of service, very prominent with respect to many online transactions, and especially when there are intermediaries who are facilitating the process, the denial of service becomes even more a very important aspect to be considered. So entails swamping a target firm. So when we talk about a denial of service, we are swamping a target firm with messages and requests in huge volume. So that is where the whole system becomes unstable, slow, and the service can very well be rejected. So which could be one of the major drivers of the denial of service attack, which is very commonly we observe with respect to algorithmic trading as well, where huge volumes of messages and requests are bombarded to the exchange. So, but if there is a denial of service because of that, it's a big source of operations risk. So we see that with the usage of Bitcoin, there is a very high possibility of operations risk. Then talking about the next aspect, privacy related risks. The risk that the transactions can be linked to the people's information itself, right? The risk that it can be linked back, because these are not purely anonymous transactions. We call them as pseudo-anonymous because the user's public key is always displayed. So the transaction is not an anonymous transaction. So there is a specific mention about the account information in each transaction, and what are all the transactions that are done by that particular user are very clearly published, which is an indication that you can very well know all the transactions that have been executed by a particular user. So the privacy of that particular user is not protected. So even those kind of risks are very much particularly serious. Then we are talking about the legal and regulatory risk. So let's look at this scenario. I'm a law-abiding user, right? I'm doing all my transactions in white, nothing in black, right? I'm abiding by the law, and I can also lose the funds in an exchange. Especially, the whole exchange might be seized because of the criminal activity of one or more users of the system. So the exchange's customers, a couple of them, they may use the entire Bitcoin process for various criminal activities, but even if the whole exchange gets seized, and me as a law-abiding user also am bound to lose my money altogether. So that's where the legal versus the regulatory kind of risks are bound to occur. Even the tax treatment is very, very uncertain, which means I cannot do a proper tax planning based on the gains and losses that I may get through the Bitcoin. So there are so many risks at this moment which are distinctive, which are more and more specific to the usage of Bitcoin kind of virtual currencies for the transaction purposes as well as the hold of value. Now on the other side, nowadays if I want to talk about for what all purposes the Bitcoin is being used, and which actually calls for the need to regulate all these virtual currencies. Now there are so many misuses of Bitcoin that we are coming across. There are so many Bitcoin specific crimes. So there are so many attacks on the currency and the infrastructure, both. So there are so many attacks, it's a virtual currency, there are so many attacks on the currency as well as infrastructure. There are instances of the Bitcoin theft. The mining pools are getting affected, which means the algorithm to generate the currency, they are getting affected. There are so many denial of service attacks that are coming up on the various exchanges, which are manipulating the exchange rates. So these are all crimes which are very, very specific to the usage of Bitcoin. And coming to the law, it's very, very difficult for the law to prevent these kind of crimes or to solve them. One, they are very new, so they are becoming more and more innovative. New ways of committing the crimes are coming into picture. There is a lack of clarity on which agency is responsible for this crime, under which jurisdiction that particular agency is coming up, who are responsible to handle these cases. There is no clarity on that whole aspect. So there are huge number of crimes that are coming up. The process is technically complex, so evaluating it is much difficult. The procedures which are used are very, very uncertain, which is making things even more difficult. And even from the resources perspective, because it being a very new technology, the resources who can really understand the criminal activities that are undergoing in this process are also very, very limited. So there is a need to work on this aspect and regulate the virtual currencies. The second major heading that I want to look at here is the Bitcoin kind of virtual currency is being used for money laundering purposes. And there is, as I have already spoken about, there is no one central system which is issuing these currency. So the tracing becomes very, very difficult, and the funds are typically routed through various mixers, and the mixing records are completely concealed from public. So even for the law enforcement, they are completely unavailable. So because of which the virtual currencies can play a very, very major role in the money laundering activities going through Hawala and various other routes, and might assist the perpetrators in concealing and mischaracterizing the proceeds of crime. So all kinds of wrongdoings being done, they because of the kind of crypt algorithms being used, the traceability of these is very difficult, and lot of information can be concealed, so which can lead to very, very criminal activity being used. Bitcoin is facilitating a lot of crimes, as we have already talked about. So lots of payments for unlawful services like terrorist financing is very, very prevalent using the Bitcoin kind of virtual currencies. So there are so many offline activities that are happening. Illegal goods are getting paid through the virtual currencies. Various services, illegal services are being claimed through virtual currencies. So criminals are getting very, very drawn to virtual currency. One, there is no regulatory oversight, so they can easily bypass the process, right? They can distinctively value irreversible transactions, and these currencies have been banned or ejected. So the criminals typically have been banned or ejected from other payment mechanisms. So they are looking forward to the usage of Bitcoin specified transactions, which means using Bitcoin kind of virtual currencies primarily for criminal activities. So because of all these reasons, there is an immense pressure to come out with regulatory guidelines to handle these virtual currencies, so that they can be used in a much proper manner and facilitate the cashless transactions to a large extent. So these are some of the topics that the aim statement of GARP for FRM 2011 has specified. I hope you got some amount of understanding regarding the same. You can very well read through the article that they have given as a part of the curriculum. If you have any further queries, you can very well get back to me by giving me a call on the number that I have given below, or you can send in an email at vamsidhar@pacegurus.com. Thanks a lot for listening to the session. Thank you very much.